Hey everybody, this is Brant from Wolf on Wall Street Trade. The S&P gained 1.65% on the week, and that makes it 2.55% for the month of December. The reason I'm not going to do too much in the market, but there were a few interesting developments we will cover, is because it was all about quad witching this week, and I'll show you what I mean. Here's the S&P 500 coming out of the previous week. This is where the trade deal was a done deal, the phase one trade deal. So we gapped up on Monday morning and then just went sideways for 3.5 days. That, just for reference, is a 0.2% range from high to low over here. Very, very small range. So it was very clear as the week went on that this was all about options expiration, quad witching, which was Friday. So that is the simultaneous expiration for index futures, for index options, stock options, and single stock futures. Happens once a quarter. This is the end of the quarter, and it's also the end of the year. And you can see it looked like there was some kind of a peg right here around 3,200 until Thursday, Friday, and again, just pegged. Every morning we look at the market and we look at what the bias is. So you look at currencies, look at yields, look at commodities, what's gold doing, what's copper doing, what's crude oil doing. You kind of get a sense of what's going to happen in the day. So there was a bullish bias on Monday morning. By Monday afternoon, that completely faded and all the cyclical sectors came down, defensive sectors went up, which suggested a more neutral market. And then Tuesday morning, Wednesday morning, same thing in the AM update. I said, I think the market is really just going to be flat, but I didn't expect this flat. So anyway, I think it was all about quad witching. This is the phase one trade deal uptrend. And as we pointed out last week in pretty much every video, the S&P is really sticking to this phase one trade deal uptrend from about October 11th. Now, there have been some developments as we've gone through this. Here's the trend line. So we had a change of character over here. We had the Dow lose 3% and the major averages wipe out a month of gains in 2.5 days. And then here is the kind of corrective bounce. This is the week of the trade deal. This is the trade deal being announced, and this is this week. S&P above the trend line. Take a look at the Dow real quick. Here's the phase one uptrend, trade deal uptrend. Here's the change in character. Here is the 3% plunge, correction, trade deal. And this last week, notice that it is back testing this trend line, this uptrend line. So here, that's 3, 4, and then on Friday opened up above it and then closed down below it. That's 5 times is back tested that, whereas the S&P is above. And there's a reason for that, and I covered that early this week for members, why the industrial sector and now transports are a headwind for the Dow. So here's the week. One of the bullish developments that was going on over here was high yield credit, which the last couple months has not been showing great relative performance. In December, though, it has just rallying into the end of the month as the S&P 500 is in this 0.2% sideways range. Look what's going on over here Tuesday and Wednesday. High yield credit is just leading higher. It's acting really well. Don't worry about this plunge. That is ex-dividend. That's normal. However, one interesting development was Friday after ex-dividend, leading lower into the close over here after a really spectacular week, risk coming off. And then one other interesting development into the close, S&P 500 basically traded where it opened most of the day. And that's what gives us this evening star. We got the gap up and open near the close. This is a reversal signal and it's pretty textbook. So when you have a big strong up candle like this one, and then you have the gap up and the star, it's pretty textbook as a reversal signal. Now, that can be a simple correction, like we had one over here, or it can lead to something bigger. Here you see one at the end of this uptrend following a strong candle, started with a minor correction and then became a deeper correction over here. The last several videos I've talked about volatility and expectations that we're going to see more volatility. We saw a 50% move in VIX since then. So this is VXX. This is the end of the prior week when the trade deal was basically announced and priced in. We saw a little negative divergence and some of the relative strength that had been building up here roll off because there's less uncertainty. The December 15th tariffs didn't take effect. This is the start of the week. This is Monday, the 16th of December. Look at this leading positive divergence in VXX. Buyers under the radar here showing up in 3C. And if you look at volatility on the week, something very interesting happened. On a week, the S&P was up and volatility should have been getting hammered. So when we come into the week, here's the S&P 500 gapping up. Here is volatility moving down. After that under the radar buying in VXX, look what VIX did the rest of the week, showing relative strength. S&P 500 is trading sideways or slightly up. The VIX is trading up. That's relative strength. This is what basically you're seeing when I show you those correlation charts where correlation between the S&P 500 and VIX spikes unnaturally. This is that kind of relative strength. What we did see on Thursday was about 24 hours of systematic selling in volatility, specifically VIX futures. And then we saw this breakdown in volatility late in the week. And I think that had everything to do with quad witching, basically softening up volatility to help the S&P close up or to hit some kind of quad witch option expiration pin target. On the whole, over the whole week, you have relative strength in VIX. Here's VVIX, the volatility of VIX, 8 weeks of relative strength. Okay, we already got the trade deal last week. Why is this still trading up here around 100, still maintaining this uptrend? If everything is okay, if the trade deal's done, risk is off the table, why is this happening? Here it is on the week, like VIX, down on Monday morning because the market, the S&P 500 gapped up. We saw that underlying buying in VXX and VIX futures. Here's the rest of the week, and notice it's trading right here at this kind of red alert or orange alert level of 100. So again, the trade deal was done over here. Why are we seeing this relative strength in VVIX on a week? The S&P 500 had no problem closing higher. This is not the biggest mystery. Okay, and I'm not going to tell you that I know why this is happening, what I'm going to show you next. But I am going to tell you that you're not going to hear about this from the places that should be telling you. They should be telling traders, they should be telling investors, they should be telling their audience. Instead of saying what stocks are you going to chase at record new highs into 2020, they should be warning you that this is out there. My members know me and they trust me, but for most of you, I'm just some guy on YouTube. Why is it me who's telling you this? And here's what I'm going to show you. I covered this in last weekend's video. I thought it was really odd. This is the CBOE SKEW Index. It's similar to VIX. VIX is basically constructed looking at S&P 500 in the money options. SKEW is figured using S&P 500 out of the money options. You can check out last weekend's video to see a little bit more about SKEW, but the basic gist of it is down here around 100, in the low 100s. It's representing very, very little perceived tail risk. Now, tail risk, or what SKEW depicts, is not the same as VIX. VIX might be called the fear index. This is like black swan tail risk. So now when SKEW gets up above 130, you're getting into perceived risk. It's showing hedging in deep out of the money puts. And this is usually done by professionals. It's not the retail guys who do this. So what I said last week was, even though we had the trade deal in the can, we were up here around 140, a very, very elevated level depicting a high level of perceived tail risk. What did SKEW do this week? Even though the trade deal is supposedly done, it moved up to 150. That's the highest level all year. As far as CBOE's actually scale goes, in their white paper, they talk about SKEW moves from 100 to 150. That's actually the top end of the range. We did see a slightly higher reading in Q3 of 2018 before the S&P's 20% sell-off in Q4. Here's that reading over here. I think it was about 159. Then we got over here and above 150. This was about 2 or 3 weeks before the S&P 500 did this into year end, down 20%. This is not something CNBC is telling you. The professionals in the market are hedging by buying deep out of the money puts. That's what's pushing this SKEW up. I'm not going to say it's depicting, a 20% decline, but why is this happening over here as we have the trade deal heading into 2020? Why did it move up another 10 points last week? So I'm going to leave it at that. If you like the video, please give it a thumbs up. Feel free to share it. If you have questions or comments, please leave them in the comment section below. And next week is Christmas, so everybody have a happy holiday.